My name's Carla Giacomini, and thanks for joining us for this home buying webinar, first of the year. And just wanted to provide a few details for about the webinar. So you can ask your questions in the Q&A section at the bottom. So please feel free to ask questions. We will get to as many questions as we can. If we are not able to get to your question, we will get back to you as long as you don't come in as anonymous. We will be able to get back to you by email with a response. And general questions work best. If it's something very specific to your situation, we will get back to you, but we will get back to you either by email or by phone. And you can either email us as well at alterna.ca email or call the contact center at 1-877-560-0100. We are going to be recording this session and you are going to be in listen only mode. Okay. And one of the things I just also want to let you know is we are going to be sending out a follow-up survey after the webinar, and really encourage you to respond to the survey. I do want to introduce our two guest speakers. We have two mortgage advisors. One handles a GTA area, Jessica Bird Carer. Welcome, Jessica. And the other, hi, and the other is Huda Shahab, thank you, Tom. Sorry about that interruption. The other is Huda Shahab, who handles the Ottawa area. So without further ado, we'll get into it. Wanted to get people all warmed up. We wanted to launch with a poll. So the first poll that we have today, you'll see it coming up on your screen. And just like what that best describes you, are you a first-time home buyer? Do you want to upgrade to a larger home or a different area? Are you a retiree or empty nester, or do you want to downsize? Are you looking for a vacation home or rental property, or would you like to help your children, grandchildren with their first home? As we know, it's very difficult to get into a lot of the mortgage markets today as a first-time home buyer. So just looking at as the numbers come in, looks like we have a lot of first-time home buyers and some others. It's a bit of a mix, which is good to know for sure. So we've still got some numbers coming in. I think we're almost pretty well done. If you want to share the results, that's great. Thank you, Ian. So as you can see, we do have a bit of a mix, but there are a lot of people looking for first time, but also vacation properties or people looking to, I guess, switch or downsize. So good mix for sure. And also people willing to help their children. I'm in that situation myself, so I understand that predicament. So, okay, Ian, thank you so much. If you want to just stop sharing, and we'll go on with the next. Sorry, my fingers are too quick here. So what we're going to cover today. Thanks, first of all, for sharing that information. And Huda's going to take us through the Alterna difference and the credit unions, and she's going to give you some information on the trends as well. And then switching over, Jessica will talk about switching refinance. Within that, we have a lot of information about uh, credit scores, also pre-approvals. So for first-time home buyer, a lot of interesting information that would help you get you your first home. So I'm now going to hand it over to Huda, who's going to start talking about the difference between credit unions and banks. Thanks, Huda.
Thank you, Carla. Good afternoon, everyone. My name is Huda. I'm a mortgage advisor here at Alterna Savings. I've been in the finance industry for over 24 years, mostly in financial advisor roles, but decided about 2 years ago that I loved helping people get into their dream home and decided to focus primarily on doing mortgages. I've worked in the big banks for most of my banking career, but have spent the last 2 years in credit union. So just know when I speak to you about the difference between the banks and the credit unions, I speak from experience. I'm too excited to get into a home buying discussion today, as all of us are trying to navigate this real estate market and home buying time. The biggest difference between a bank and a credit union is that banks are for-profit organizations and focus on making money for the shareholders, and credit unions are non-profit organizations focus on making money for their own members. Just for that simple reason alone, the way in which we do business is different. We offer a full suite of financial products, but as a member, your experience will be a personalized one. Here at Alterna, we offer everything you'd expect from a financial institution. Also, we do offer very competitive rate for our mortgages and our deposits. In addition, our members have the flexibility of banking in person, virtually, or digitally, means banking comfortably at what makes them feel comfortable. What is happening in real estate in 2024? The home market trends that's happening in 2024, we can see an increase in our average home price year over year in the GTA, 1.2%, in Ottawa, 7.1%, and in Ontario, 1.4%. Decrease in average condo price in the GTA of 0.5% year over year. Prime rate has held steady since July 2023 at 7.20. There has been an increase of 50% since 2021 for multi-generation home buying due to higher interest rates and prices. And Sagen does suggest that housing market downturn might be nearing its end based on several factors. One of these factors is the home listing increase by 1.6% month over month, providing buyers with more options. Interest rates are not likely to decrease until mid-2024. Despite 5 consecutive months of decline, the MLS Home Prime Index remained stable. And now, like statistically speaking, the 5-year fixed mortgage rate is the most popular in Canada, accounting for nearly 50% of all outstanding mortgages. This chart showed how 5 years mortgage rates have been decreasing since 1980. It is quite important to consider historical mortgage rates because they provide insight into how current market conditions may affect future borrowing costs. And now I pass it by to Jessica.
Hello, everyone. Good day. Thank you for joining today. So my name is Jessica Bird. I've been with Alterna for a few years, and I've been in the banking industry for 18. And I'm excited to go over some new information with you guys today. So buying a home in the market has a few different segments. So let's get into renting versus owning. I see that there about 30% of you are first-time home buyers. So a lot of this would pertain to you and what is the best choice for you and what you feel more comfortable with. Renting, there's always pros. You have the same monthly payment, and the landlord usually handles repairs and covers expenses, given that you have a really good landlord and they're on top of everything. The cons, obviously, if you wanted to paint your bedroom, you have to ask for permission. If you want to change a light switch to personalize your living quarters, you have to ask permission as well. Also, they have the right to, if family or themselves are moving in or if they're selling, they can ask you to leave. So that's, not the stable environment for some. And then owning your own home, it's providing stability in a community. Also, you're building equity as the real estate market continues to grow every year. So it's a good investment. Cons for owning would be you have more expenses. So your heat and your gas is going to change from seasons for air conditioning or heat. So you always want to keep in mind and budget appropriately that way. And then maintenance. So if something happens to your roof or if your furnace needs to be replaced, all of these things are your responsibility. So you always want to forecast any kind of savings for those kind of things. So that's the difference, the main differences between renting and owning. And if you're leaning more towards owning, then we have some more information for you coming up. Um, so the costs of ownership, things to consider when buying a home. So closing costs overall, I typically recommend 1.5% of the purchase price. This usually covers all of the expenses here listed. So appraisal can range from anywhere from 350 to 750, depending on the house, whether it be city or rural. Also, the down payment minimum is 5%. We'll talk a little bit more about that in the presentation. And then land transfer fee, depending if you live downtown Toronto or outside the main urban core, that will depend also on what percent you pay. And then also mortgage insurance premium. So if you have a CMHC mortgage, you'll have premiums on your mortgage. We'll touch more about on that. And then legal fees, this depends on what lawyer you go with. I always recommend you get quotes from at least three because they're all going to charge different rates. Whether the firm is a bigger one, they might charge a little bit more. If you have, a friend or family, they might give you a discount. So always shop around for this. And then home inspection fee. Usually your mortgage person or your real estate agent will have a list that they would recommend to you. This can be from anywhere to 400 to 650. Shop around, but remember you get what you pay for, so you don't want to get too cheap of an inspection professional. And then ongoing costs with buying a house. So property taxes is something that changes from city to city. So I would keep in mind, and if you're looking in, say, Hamilton versus Guelph, what are the differences? It could be a huge difference. So that could play a part in where you're looking for to buy your home. And typically, usually the property taxes go up about 3% a year. So always keep that in mind with your yearly budgets. Property insurance, always good to get quotes from different companies, just as you would with car insurance. Utilities, gas and hydro, as an example, you can call these companies, give the address of your new home that you purchased, and you can get that set up before even moving. Usually, a lot of these companies have yearly plans where you pay the same amount every month, which can be beneficial to a lot of people who really like to stick to a set budget every month. And then land maintenance fee, not fee, sorry. But if you buy a house, do you need to buy a lawnmower to keep up the grass? Do you, just things like that, that some people tend to forget. But if you also have a condo, then these fees usually are covered with the maintenance. Okay, so the next is determine if you're ready. So how much can you afford? Have you done a budget? So write down your income, your current debts, utilities, what they would be approximately, the mortgage amounts, the mortgage payments, property taxes, and just go through the budget and see what you can afford comfortably with still sustaining your savings that you're doing every single month. You don't want to not be able to still save. So go through a budget. You also your bank advisor can usually help you with this too if you need some help. And then also down payment. So do you have 5%? Do you have a little bit more? Something to look at when you're looking at homes, look at the price and see how much of a down payment you have. And then there's a lot of calculators that we have on our website that you can use to see what your monthly payment would be for a certain purchase price and down payment amount. So that can help with your budget. And then also things to look at is your credit history. Do you have a good credit history? Do you have a lot of debt? So that's something that you want to look at when you're looking at applying for a mortgage, because we need to include your debt payments when we do your mortgage application. So you want to make sure that's less than 40% of your monthly budget. Alrighty, so down payment is a huge thing when buying your home. So the minimum is 5%, and that would be a default insured mortgage. So that would be insurers such as CMHC or Genworth. They secure the mortgage when you don't have 20% down. So that premium for default insurance actually gets added to your mortgage. So you don't have to come out and pay that out of pocket. So the 5% also is up to 500,000 purchase. So to keep in mind, anything over the purchase price of 500,000, you then have 10% that you need to pay on anything over 500. So just to keep that in mind.
And I guess,
And
Jessica, like for a home in the GTA, that might be difficult to get to, right?
yes, exactly.
Yeah,
So a lot of the time people are paying the 5% on the first 500,000, and then say if it's a home of 750, then you're going to pay 10% of 250,000. So
right, right.
yeah.
Yeah, something
Okay.
to keep in mind for sure.
Definitely. And then 20%, you don't need CMHC default insurance. So you're good that way. And then also just to keep in mind with down payments, because this tends to be something that some are surprised, is with any down payment with the government, you need to have 90-day history of your down payment. So whether it's coming from an RSP, a TFSA, as a gift from family, just make sure you have 90 days history of down payment. Um, that is something that we need for, so just if you prepare ahead of time, that makes things a little smoother. And then also the mortgage insurance, CMHC, what we were just speaking of. So what it is required by the government when you are a home buyer and you're putting down less than 20%, like we just spoke about. The type of insurance compensates mortgage lenders, such as Alterna, for losses caused by mortgage default. The most common reason for defaulting is not making your mortgage payment. And then also to qualify for default insurance, it has the same kind of lending rules as Alterna would. So the stress test is applied. Um, Income requirements are basically the exact same as Alterna, and kind of all banks have the same requirements and policies as CMHC would. Um, so I think, Carla, we're into our next poll. Oh, I think you're on mute, maybe.
Sorry, Jessica, sorry. Yeah,
That's
so we
okay.
had a member, Patrick, asking, he wants to know a little more about that 90 days for the down payment, the history. He's asking a little more. What does that really mean? So if
Certainly.
you have any examples.
Yeah, for sure. So if you have the money, some of it in your RSP, that's great. There's a form that you fill out with your bank where you hold your RSP as a withdrawal form, and we can use that and the 90-day history of your RSP. If it's in your savings account, same thing. We just need the 90-day history showing in your bank account with your name on the bank account. So say if you have, $20,000 down payment at RBC and your purchase date is June 1st, we would need 90 days from the date of your application to show that that money has been in your account for 90 days. And then gifts from family, typically we like to see the money being deposited into your personal account and the draft coming from your personal account, and there's a gift letter for your family member to fill out for the gift funds. And I think that's mostly, oh, if you were to sell a house, for instance, that's a little different because it would be coming from the proceeds of the sale. So we would need the sale agreement from the house being sold. And I think that covers most of the different down payment sources. But if you have any questions outside of that, definitely let me know. Oh, I think you're on mute again, Park.
Sorry, I just
That's
had
good.
some background on. Sorry. Okay, and another member is asking, does the source of income matter in terms of applying for mortgage?
Definitely. So the
Yeah.
source of income, if you're salaried, a letter of employment and current pay stub is great. We would like to know if it's salary, hourly, how many hours, what is your set rate. Also, are you on probation? We like to see and know those details. And then your current pay stub would then support your letter of employment. If you make bonuses or a lot of overtime, sometimes it's in your best interest to use the last 2-year average. So in that case, we would need the last 2 years of T1 generals and notice of assessments. And the same goes with self-employment. So we would need the 2 last years of tax documents to support your income.
And so
Yeah.
it doesn't really matter, Jessica, like, from your savings, the source from your savings, right? Like whether you have a TFSA, it's coming from there, it's coming from just in a savings account, right? It doesn't really matter. That doesn't matter, right?
No,
If
it
it does,
doesn't
yeah,
matter as
yeah,
long,
yeah,
yeah, as if it's registered though. So if it's an
yeah,
RSP, there is a
right.
withdrawal form that we use.
Mhm.
But it doesn't matter what account, as long as it's in your personal name.
Perfect. Thanks so much. Thanks, Jessica. Great info. And as Jessica mentioned, we're going to go to the next poll here. So, Ian, if you just want to, yep, uh, launch that poll, and I guess everybody can see it on the screen now. So, on a scale from 1 to 5, 5 is the most important. How important are the following points when choosing a mortgage lender? So, A is the lowest interest rate, B is the lowest monthly payment, C is the best customer service, D is the lowest closing cost, and E is like recommendation from family, by family or friends. So, just to want to get your insights. And I just want to let you guys, everybody know that the poll's anonymous. So we have no idea who's answering what. So just answer honestly. So we have a bit of a mix, but definitely lowest interest rate is leading the pack along with lowest monthly payments. It's a big part of your expenses for sure. So I could see that's important. But best customer service is also inching in there as well. So yeah, looks like it's a mix really of, I think, the it's all over the place, but definitely interest rate, monthly payment, and customer service is important. Okay, great. Well, thank you so much for sharing those results with us. And we are going to go over back to Huda, who is going to take the next topic about how to start saving for your down payment.
Thank you. Thank you, Carla and Jessica. And I need to apologize for my voice because I'm getting out of a very bad cold. So that's why sometimes, like, I have. Anyways, so let's talk now about the very important thing, which is how to start saving for your down payment. So there's so many ways to try. And one of them is like cut your expenses or put your money in high interest savings account. Open a first home savings account, FHSA, which is a registered plan which allows you, if you are a first time home buyer, to save to buy a qualifying first home tax-free up to a certain limit. You have to be 18 years of age and you did not live in a qualifying home as your principal place of residence that you owned or jointly owned in this calendar year or in the previous 4 years. Annual limit is $8,000. Money should be in the account of FHSA for 90 days to be used for down payment. We do have Home Buyers Plan, which is a program that allows you to withdraw from your registered retirement savings plan, which is your RSP, to buy also a qualifying home for yourself. Currently, the home buyers plan withdrawal limit is $35,000. The money also should be in the RSP for 90 days to be eligible for home buyers plan usage. And the program allows you to pay back the amount withdrawn within a 15-year period. TFSA, this is another registered plan vehicle to save money for your down payment, which allow you to withdraw money tax-free. This program started in 2009, where any Canadian with a valid social insurance number and is 18 years of age can open one. The annual amount room limit will be indexed to inflation and rounded to the nearest 500. This year, contribution limit is $7,000. Having the big milestone in your home buying journey comes at the pre-approval stage, where you will get a clearer picture of the home you can afford and what you would pay each month, in addition to locking in the rate for 120 days. Mortgage pre-approval means that the lender has agreed in principle to lend you money towards the purchase of your home. Once you've made a successful offer on a house, you will have to formally apply for a mortgage to get the final approval. Credit score is very important in the pre-approval and firm approval mortgage process. Credit score ultimately tells us how you manage your credit obligations, bill payment, etc. What does affect your credit score? And this is a question asked by a lot of people. Length of credit history, payment history. How much do you owe on your credit cards? Number of credit inquiries, which is very important, and a lot of banks do not tell you that. Types of credit, mortgage, car loans, lines of credit, any credit. Therefore, in order to maintain a good credit score, always pay bills on time, pay down balances on credit cards, check your credit report once a year to make sure that your report is accurate, because believe it or not, error does happen. And I'll pass it back again to Jessica.
Hello, everyone again. One of the great things and good options for people, because I know affordability is really hard in today's market, is the ability to multi-ownership on a house, the mortgage, either with parents, friends, family members, and also the down payment is, again, the minimum of 5% on the first 500, of course. This helps people qualify for a little bit more. Also, parents can always co-sign a mortgage for someone. We see a lot of that now, just because the stress test and the interest rates can really keep the pre-approvals really low for one individual. So adding people as co-signers and or people, can all live together in a house too. So that's becoming a lot more common, especially in the GTA. And then also a lot of people ask about the difference between fixed and variable interest rates on mortgages. So there's pros and cons to both. And today it's a little bit different as it was, say, 5 years ago. The pros for fixed mortgage, of course, is the payment stays the same for the term that you choose. So if you pick a 5-year fixed term, right now it's 5.19%. You're going to have that for 5 years. It's not going to change. Your payment is going to remain the same. So that's a little bit comforting to some people who really like to stick to their monthly budgets. And then amortization on the mortgage is guaranteed to remain the same as well. Variable rate fluctuates with the prime rate. So right now, prime is 7.2%, and it hasn't moved for a little while. And Bank of Canada, every couple of months, usually will make an announcement if it stays the same or not. This will affect your interest rate on a variable mortgage. So the pros is if it goes down, you benefit from it going down, but also you got to keep in mind that it can go up as well. So if it does go up, then you're paying a little bit more towards interest than you would payment principal. So it's the same for fixed. The cons would you don't benefit from any lower interest rate for the prime. And also with the variable, amortization may increase as well. So you want to keep those in mind with those two. Historically, variable rate has usually always been lower than fixed, but right now it actually is a little bit higher than fixed. So we've been seeing a lot less variable right now than we have fixed. Okay, so moving on to switching your mortgage. We have a great cashback offer right now too, so I'll talk about that a little bit. But if you're at another bank and your renewal is coming up, usually within 6 months, they'll send you a renewal package with rates and terms to pick from. If you want to shop around, you can. We like to always stay competitive, so we always like to have some rates that are interesting to other people to switching your mortgage to Alterna. And we also have some great perks as well. We have 20% prepayment on your mortgage every year. So that's on the principal amount. You can do that in multiple payments and it doesn't have to be a set amount. You can also change your payment frequency to Excel weekly, bi-weekly. This pays off your mortgage a little bit faster. Also, with switching your mortgage, it does involve an application, usually an appraisal, but also if you have some debts you wanted to consolidate into your home, this is a great time to do that. So any credit card debt that you can't seem to pay off in full every month, usually they're about 20%. So that's great to roll it into your mortgage if you can, because 5% is a lot lower than 20%. Alrighty. So also how to become mortgage free faster. So a lot of the other ones I just mentioned, so the 20% prepayment every year is a great option if you have some extra money at the end of the year, say your income tax return refund, you get some back, you win the lottery, anything, any extra money you can put towards your mortgage. And then also the accelerated the payments will definitely pay down your mortgage faster. And then understanding mortgage prepayment penalties is another common question that comes up. So fixed mortgage and variable mortgages have two different penalty calculations. Variable mortgage, one of the pros for this is it's usually a little bit lesser because it's 3 months interest of the outstanding principal, and then fixed is the same, but also with the fixed penalty, the closer you are to maturity, the lower the penalty is as well. So it really depends on your principal, the renewal, how close you are to renewal, and then your interest rate. So it's hard to predict what it would be, but you can definitely try to figure it out at home if need be, or you could get a payout statement from your current bank if you're looking to switch over to Alterna. And then also, so we just laid out in 8 steps, the guide to purchasing a home. So making sure you're ready and understand the cost of owning a home. So the last slide, I just go over a lot of the different expenses of owning a home. So you want to make sure you're putting that in your budget and really adding in any kind of emergency fund. So that would be, if you had to replace a furnace or roof, you have accumulating monthly emergency fund. Second would be getting the pre-approval done with your bank, making sure that they've checked your income, they've checked your credit, they did a full one, because I know there's a lot of difference sometimes between calculating what you can afford, but then actually having a real pre-approval done when the full process is complete. So there's no surprises when you actually go to put an offer on a home. And then finding a good real estate agent. Usually real estate agents will ask you how much your pre-approval is for. This is so they're not going to show you any homes that are not within your budget, which is saving you time and your real estate agent's time as well. And then making an offer on the home. So things to keep in mind with that is if you have conditions, it's always safe to put a condition of finance on an offer, just in case you have any doubts that the house is worth what you're paying for. You could put a condition of finance. We could get an appraisal done before the end of the condition, just to safeguard yourself. And then also getting the home inspection done, usually around the same time. So a condition of finance, condition of home inspection, those are two really common conditions. And don't let anyone pressure you into not putting conditions, because you need to go with your gut feeling, and you want to safeguard yourself in the process. And then finalize your mortgage. So once your offer is accepted and all your conditions are waived, then we can complete the mortgage and have the appraisal done. And then once you close the deal, I usually suggest to my clients to set up the hydro and gas before move-in day, get everything done, and so it's not a last minute when you're moving, because moving companies and trucks and all of that can be a lot on all in one day. And that's usually the whole process in all of that. But it should be very easy and streamlined if you are prepared and you go in the flow of these 8 steps. So that is all I have for today, Carla. I'll hand it back to you.
Perfect. Thank you. Yeah, great. Well, thanks so much, Jessica and Huda. That's great info. So I'm going to just go through some of the tools that we have online that can help you in your buying journey. At alterna.ca /calculator, we have a retirement planner. We have a number of different calculators in there, including mortgage calculator. And there are blog articles available as well at alterna.ca /blog. And there's also budget planner at alterna.ca /budget planner. So we do have a lot of information. What we're going to do is we will send out links in the email, the follow-up email to you tomorrow. So you have access to all of this. It's just a quick link and you can go and take a look at. We have a mortgage prepayment calculator, and there is just a mortgage affordability calculator. Jessica was mentioning about down payments. It shows how much potentially, you can get how much you can afford for a mortgage depending on your situation, how much down payment you have. So use the tools and it'll help you get there quicker. And we also have a number of questions that have come in that we'd like to get to. And there are a couple around FHSA, which one is like, if I owned a house in the past, can I be considered again as a new home buyer? I don't know, Jessica, Huda, if you want to take that on. I know that we've done a little. Um, uh,
I
okay,
can.
Huda, thank you.
Okay, because it's like it's FHASA and RSP, that both of them they have this like if you do not own a house, it's easier. I did explain it briefly. It says 4 years and this year. I always tell the members, think last 5 years. If you did not, your name was not on a house the last 5 years, you can go in and use again first-time home buyers like FHSA and RSP. You can use it as a first-time home buyer if you haven't owned and wasn't jointly owning on a house in the last 5 years. And I want to mention something else. Let's say you used your RSP 5 years back towards your first-time home buyers and you sold the house 5 years back, but your balance now is still you're paying back the RSP, you can't use it. Your balance should be from the previous usage for home buyers plan and FHSA, well, not because it's zero. The balance should be zero if you're going to be using it again. So yes, you can use it, but for easy calculation, just say 5 years back, I wasn't jointly on any house and I didn't own a house. Yes, you can use it then.
That's great. Thank you so much, Huda. It's a new plan that just came out last year, so there's lots of
Yeah,
questions around it for sure.
yeah, yeah. And that's why like you can't even think, well, you can because now you have it. But just instead of going, if you read it on their website, the government website, it goes into details 4 years and 1 year. So always a quick calculation 5 years back. I
That's
haven't been
great.
on a house or joint owner.
That's
Then you
amazing.
can use it.
We have one other question on the FHSA, and they just said if they put the money in and then they decide for some reason that they don't want to buy the house anymore,
Mm.
what happens to the FHSA, right? So I know that, you can transfer it to an RSP or REF, but any other, uh,
Okay, because like I'll
yeah.
tell you, I will tell you as much as I know because
Yeah.
yeah, because it's a brand new. So you can transfer it to RSP, but
Hmm.
when you transfer it to RSP, you have to pay taxes on it because you can take the money tax free if you're using it for first time home buyers. That's the difference. But if you want to switch it from FHSA to RSP, you have to pay taxes on this before. And you can take it for anything, but then you have to pay taxes because this money is deducted from your income tax the year before. It is in a way, not every way. It is very, like I said, it's very new and it has a lot of information around it. So I don't want to be giving wrong information.
So,
But you,
to that point,
yeah,
Huda, then we can get back to everybody
yeah,
on the call with all the details then,
yeah.
right? We'll do that so everybody has the information. Because
Mm.
I'm sure a lot of people are thinking, should they open an FHSA? They're not really sure if, anything can happen in the future, right?
Well, yeah,
Okay.
and you can use it. Like you can use it for anything. It doesn't have to be, it's like RSP. You open it for your down payment and something happens in life. You use
Right.
it. You pay
Right.
taxes on it. It's not locked in for first time home buyer. But when
Right.
you use it for other than that, you will have to pay taxes on it because this money it was deducted from your taxes before. So you never paid taxes on this amount. So when you
Right.
use it for other than home buyer's plan, it has to be taxed.
Right. We have another, Marie also asked a question. I guess they want to transfer our speech to FHSA. So you know what? We'll put together an FAQ and we'll send it out to
Mm,
everybody, and we'll address your question as well, Marie, because I'm sure a lot of people are asking the same thing.
mm.
So that's great. Jessica, I have a quick one for you here. If your home is 90% paid off, can the equity in the home be used as a down payment? One of our members is asking.
For a second home, like a
Yeah,
down payment for
for
a
a
second
second
home.
home, yes.
Yeah, so in that process, so you have a small mortgage on your current, you want to take out, say, 200,000 out of your current home. You can do that by refinancing your current home, either taking it out with a secured line of credit or another mortgage, a second mortgage. So if you're using that as a down payment, you would take that money to use it as a down payment on your second home. A lot of parents are doing that actually. So a lot of parents that typically own their home outright will refinance their home, given any certain amount, say 200 to their child for a down payment. We're calling it early inheritance, and it's very common now. Um, that money would be a down payment, and also you wouldn't need the 90 days in that case because it's coming from the equity of the home, so we know exactly where it's coming from.
Thanks, Jessica. Sorry. And another one, which I thought we've had before, is can a pre-approval for a mortgage be done without actually having chosen a home, Jessica?
Absolutely. And I
Always.
recommend doing this 100% of the time because it's going to tell you before you start looking what you can afford. And things to keep in mind is if you're looking at a condo, go on realtor.ca and go look at condos that you're interested in, and take a look at what the property taxes are and the condo fees of those specific condos. So then when you're doing a pre-approval with your mortgage agent, you're keying in those numbers appropriately. So you're getting a more accurate pre-approval based on the condo fees of the buildings that you're looking at, because in the GTA they can go from 200 to $1,000 a month, and that really affects the outcome of your pre-approval. But definitely get that done even before you pick a realtor.
Great, thank you, thank you. And either I don't know, Huda or Jessica, we have James is asking, as a parent, what are the liabilities of co-signing with your children in terms of your own ability to borrow, say for a second mortgage for a vacation home, right? So I guess they're trying to help a child, but they're also um, looking at purchasing a second home for themselves, a vacation home for themselves.
Well, of course, because signing for a child means you're adding liability to your credit. So
Right.
this definitely will affect what you will be approved for later on for a cottage or something. Like this is in a nutshell, this is it.
Yeah. Okay, great. Great. Okay. And as far as a little more, I guess, Jessica, on the prepayment penalties that you talked about, if there are prepayment penalties, how does a lump sum payment yearly work out? So how to just talk a little about that, the prepayment penalties a bit, if they wanted to make a lump sum
Mhm,
payment.
mhm.
Yeah.
So it's every year it's 20% of the original principal amount. So your original mortgage amount, 20% of that a year, you can pay penalty free. So say if you know you're going to sell your house and pay out your mortgage, and you want to prepay a little bit, I think this is what you're asking. You want to prepay a little bit, it would decrease your actual penalty upon paying off your mortgage. If that wasn't your question, I apologize. But the 20% a year, also, it doesn't have to be in one payment, it can be in multiple payments, and it's not a set amount, just up to 20% of your original mortgage amount a year.
Great. Thank you, Jessica. And we also have another question from our member Linda. For vacation property, can the first time homeowner plan be used?
Is it her first, like
If
first
it's
time
the
home?
first home, right? If it's their first home. Yeah.
If it's the vacation is her first
First
home,
home, yes. But
but
not if
if
they
it's,
currently reside in a home, for
yeah,
sure. Yeah.
yeah.
Yeah. Yeah. Okay, and the we have another one. For the first home buyers plan, they're asking a lot of questions on this new first time home buyers plan.
Mm.
That I guess the age limit is 70, and yes, there is an age limit for sure on the FHSA for sure. But like I said, I think there are a lot of questions on FHSA, so we will send you out the Q&A, sorry, the FAQs, all kinds of frequently asked questions on FHSA, so that we can answer all your questions in detail tomorrow. Um,
Can I add one more thing,
yep,
Clara,
go
about the
ahead.
FHD?
Absolutely.
Yeah, because like it's very recent, and yes, people have a lot of questions, but I just want to mention because it's 8,000 annual limit but it started last year. Clients can put one shot 16,000 this year, which is for last year and this year, into this account. And this 16,000, if it stays in this account for 90 days, they can use it for home buyers.
That's
Perfect.
provided they actually open the account in 2023, correct? They have, right,
Uh,
Huda? They have to
uh,
have opened it
that
in 2023.
I will
Yes.
have to get back to you on
Yeah,
that
yeah,
because like
yeah.
I
They
am
have to
like
have opened it in 2023 in order to get yes, for sure, right?
yeah,
So if you opened a FHSA in 2023 and you didn't contribute the maximum, you have a carryover to 2024
mm,
plus the 2024 limit, which is
yeah,
8,000 this year, as Huda
yeah,
mentioned, right, Huda?
yeah.
Yeah, 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 yeah. Okay, perfect. Okay, and we have one other question which is very specific. I'm not sure if we're going to be able to answer it, but and it's from an anonymous member, so I'm not sure. You might want to put your question as non-anonymous because I'm not sure if we're going to be able to answer your question. But here, I'm going to throw it out and see if either Jessica or whoever came across this situation. So, how does Alterna consider a mortgage for a tiny home if the home is on rented land?
I'm
You ever come
pretty
across
I'm
anything
pretty
like that?
sure because it's on rented land and it's a tiny home, it wouldn't be a secured loan. It would be a different loan because it wouldn't be secured to land. But I honestly haven't had that question
Situation.
before, but
Yeah,
I
it's
would.
very
Mm.
specific for sure.
Yeah, I never had, but I have been questioned about mobile homes and on rented land. I know we do exceptions if the home is actually on land and there is like a 25 years lease on the rental. It is very, very exception basis. We do give that, but
Okay.
I've never had tiny home on like no.
Okay. Perfect. Thank you. And we have a member, James, he's asking about a mortgage in Saskatchewan. So maybe you, either Jessica or Huda, could talk about a mortgage outside of Ontario.
I believe we do because
Yeah.
now I'm doing a mortgage in Calgary.
Oh,
So
okay.
yeah, it's
Okay.
like, there
I've
are some regulations we follow Calgary, but we do follow our own policy. It is Alterna Bank, so we follow the policy, the OCP of Alterna Bank, like every details. But yes, we do mortgages all over.
Great.
Yeah,
Thank you.
I
Who,
think
you, Jessica? Yeah, you were gonna.
yeah, it's definitely dependent also on the location. If it's in a city where there's comparables for us, if it's very rural, it might be a little harder. But it's definitely based on per case. So definitely, if you know the city or have the actual house, you're more likely to get an exact answer for sure. But we do outside of Ontario for sure.
Okay, great. Thanks so much. Okay, and we have a member, Karen, who's asking about like when are prepayment penalties applied? Like what the situation that would warrant a prepayment penalty.
Well, you wouldn't have a penalty if you're within the 20% prepayment. Is that what they mean, Carla? Is like the
No, I
prepayment?
think they're talking about the
Oh,
penalties
paying
on.
off the mortgage.
Yes, exactly.
Got it.
Yes. Thanks, Jessica. Sorry.
Yeah.
Yes.
Paying off the mortgage. So that would be paid the day of closing. So if you're paying it out June 1st, then the penalty would be on the payout statement the day of June 1st. So it would be paid with the rest of the mortgage balance.
Okay, perfect. Sorry, we got one. I just okay. And I think that that is it for I've just waiting for some answers back to my questions. We do have a few more questions, but I just want to clarify them. And I think we're good. So that's really going to conclude our webinar. If you have other questions, please put them in the Q&A and we can actually reach out to you afterwards with your answers. And as long as you don't put them in as anonymous. Okay, appreciate it. Thank you so much. And I just want to also thank everybody for attending the webinar. I've mentioned before that we will be sending out a survey tomorrow. And, some of you actually put in the comments of the type of content that you want like to see in the future. So thank you very much for that. We will definitely see if we can, accommodate and do some webinars based on some of the content that you provided. So thank you for that. In the survey, it also asks what other content you'd like to see. So if you have chance, it'll take you like a minute just to fill in, complete the survey. You're going to get it by email tomorrow. And we will follow up with some of the information we talked about today on, some of the frequent questions that have come in through the chat. And I'd also want to let you know that with our email tomorrow, you will get a link to the recorded webinar. If you weren't able to see parts of it, I know we had one member that had some issues from a sound perspective. So you'll be able to access that webinar. We'll also send you the links to all of the tools, the calculators. We have a ton of blog articles on home buying on our website. We have a budget planner as well. So we'll send all of that to you as well if you're interested. And thanks so much. I want to thank Jessica and Huda for all their great information. And thank you, all our members, for joining. And that's it. Thanks so much. Have a great
Thank
day,
you.
everybody. Bye
Thank
bye.
you.
Bye. Thanks.